everyone. This is Eric from Traders Helping Traders with this week's Tricks of the Trade. What I actually want to talk to you about this week is the concept of a flat position. You know, we're so used to looking for opportunities as traders that sometimes we forget that staying out of the market is a position as well. Let's take a look just as a for instance. Here we have the December British pound. And you can see that the market has put in resistance. You can see here we have our green-red bars. We have several hits kind of around this high near the 155.30 area. Somewhere around there. We have a couple, 3 hits back here and a couple more hits here. It would be very tempting to say that we should buy this market long. After all, it looks as though our moving average lines are about to cross. Our momentum is moving to the upside. There's a great temptation here to try to buy this market. Obviously, the problem with buying the market at this point is that we are in a very strong downtrend. The market has been trending lower, well, for quite some time. If we go back here, it looks like it topped out in the summer, around the middle of July, and it's been declining ever since. Now, that has been a 6-month trend. It is not unusual to see the market reverse off of a 6-month trend. However, we don't usually see the markets just make what they call a V bottom, where it pivots and takes off without giving it a second look. The point I'm trying to make here is that even though we can look at a chart and formulate a trade, it's not always to our advantage to do that. Now, we could certainly formulate a trade to buy this market from here. We could buy above this resistance area, we could cover below the lows, and we can set our profit target perhaps near the resistance, near our moving average line up here, somewhere around the 170 area. And it's not that there's anything wrong with that, because we try to make the market prove us right before we get into the trade. So that is a feasible trade. However, we don't want to get caught in a whipsaw trade, obviously. Therefore, when you take into account the overall trend, that momentum is fairly neutral. You can see we're kind of here at our 0 line on our MACD. That our moving averages and our prices are all intertwined. That perhaps we might be better off waiting for a sell signal, something that goes with the trend, something that will give us a higher probability of success. So you have to learn to weigh your options. You have to be able to stand back and not necessarily make a trade just because you can. Remember, staying flat in a market is a perfectly viable situation. Unless you have a sell signal, you're usually better off waiting for the market to give you a proper signal instead of just making up a trade and jumping into the market just for the sake of being in a trade. And that is this week's Tricks of the Trade.